Ever open a stock market app for the first time and just stare at the screen? With all the flashing numbers and jagged lines, trying to make sense of it can feel like being dropped into the driver's seat of a speeding sports car while wearing a blindfold. And that overwhelming feeling isn't unique to our digital age. Even decades ago, investors had to navigate a constant paper avalanche of changing prices just to figure out what was happening on the road. To actually tame all this chaos, professionals rely on two very different maps to guide them: technical analysis and fundamental analysis. Think of a stock like that sports car. To figure out if it's worth your time, you have two choices. You can stand by the track and measure exactly how fast it's moving right now, or you can pop the hood and inspect the engine. Deciding whether to focus on the road or the engine defines exactly what type of investor you're going to be. Let's start with the road. Technical analysis is the study of how a stock behaves on the pavement. This method looks at historical price movements, the current trend, and how many people are buying or selling, also known as trading volume. This chart shows how traders take all that raw speed and momentum data and stretch it into a timeline of activity. They use tools like these red and green bars to track the actions second by second. The core idea here is human psychology. Because our collective emotions, like fear and greed, tend to repeat themselves, these analysts look at past price patterns to predict where the road leads next. The people who rely on this map are usually short-term traders. They thrive in a high-intensity environment, often buying and selling in a matter of minutes. They don't necessarily care what a company actually sells, only if its momentum is picking up speed. These traders also use strict safety measures. If a stock's price hits this specific floor, an automatic exit triggers to prevent any further damage, just like hitting the brakes. Ultimately, technical analysis is the art of reading market psychology to catch a short-term move safely. But what if you don't care how fast the car is driving today? That brings us to fundamental analysis. This approach ignores the traffic outside entirely to focus on the company's actual financial health and its business model. The users of this method are long-term value investors. They aren't looking to rent a stock for a quick ride. They're buying a permanent piece of a real business to build wealth over years. Warren Buffett is the most famous practitioner of this philosophy. He's known for tuning out the daily noise of the stock market in favor of checking the parts and the performance of the business itself. Looking under the hood requires digging through a company's historical records to see if it's actually as profitable as it claims to be. This is the mechanic's inspection checklist. First, the PE ratio weighs the price tag against actual profit. Next, EPS reveals the profit produced for every single share. Finally, the debt-to-equity ratio splits what they own versus what they owe, revealing if the company is drowning in borrowed money. By checking these parts, fundamental analysis cuts through the hype, helping investors buy high-quality companies at realistic prices. While most people think you have to choose one or the other, the mechanic and the driver actually rely on the same machine. They're just looking at the car from two different angles. Fundamental analysis tells you exactly what to buy. It helps you find those durable, high-quality businesses that are built to last. And technical analysis tells you exactly when to buy them. It ensures you don't purchase that great company at the peak of a hype cycle when the price is dangerously high. Even historically, the key was combining a company's industry with its trading range, like these high and low averages at the bottom, to find the right moment to enter the market. Whether you choose to be the driver watching the road or the mechanic inspecting the engine, knowing how they work together takes the guesswork out of the journey. It replaces reacting to the noise with a clear strategic plan.